Hello, one day is Thursday, May 1st, 2025, and this is the week at charts. Obviously, I want to thank all you guys and girls for being here. I appreciate you taking time out of your busy schedule. Probably won't do a show next week in case you want to join us live. I do these shows usually on Thursdays at noon Eastern, and you can register at davelandry.com/webinar. So we talk about, well, obviously current market conditions, as usual, I have a lot to say about that. Things are kind of improving at the moment, though. Check back off. And your questions on trading, your favorite stock, and crypto picks, feel free to just punch those in now. Add USD after a crypto pick, so I know it's crypto. There's my contact information. I'll give you a little bit more of that in just 1 second. I'm going to continue my series on a million little things will make you a successful trader. And this week's topic is something that I'm really going to flesh out. It's kind of like a subtopic, and there's going to be many million little things under it, and that'll make a lot more sense when we get to it. And of course, Q&A. Feel free to ask any questions you might have. There's a disclaimer screen. As you know, you can lose money trading. Or as I often sum it up, all predictions are about the future, and a lot of stuff can happen between now and then. There's all my contact information. New this week is Substack, or last couple of weeks, something I'm beginning to work on, and I'm pretty excited about that. It's a really interesting platform, and I actually really never heard of it until quite recently, or certainly never checked it out until recently. All right, let's talk about the mystery charts and the methodology in action. This is this week's mystery chart. This is a buy, believe it or not, in this market, huh? You can, there's the parameters down below, straight from the spreadsheet. If you want to look at these archives, you can go to davelandry.com/archives. And if you want to see the newer ones, you can go to youtube.com/Dave Landry. If you want to see them live, of course, you can go to davelandry.com/trading service. Anyway, nice little trend higher, nice little pullback to the moving average. This is what I call a Landry-like pullback. Entries here, stop is here, initial profit target is up here. Notice that you pull back to the 30 EMA after 10 bars of Landry Light, and it's been in a longer term uptrend too. As you can see, going back for a long, long time, or just look at this big blue arrow. And the Landry Light just counts the number of bars, obviously, above, for uptrends, the moving average, the number of lows above the moving average. You can use your favorite moving average in a TFM 10% system. As you likely know, I use the 50-week simple. For this, I like to use the 30 EMA, but it works with all moving averages in all time frames. Anyway, AGI is a mystery chart follow-up. This one was not a mystery chart because I did mention it after it triggered here. It triggered and before I had a chance to make it a mystery chart in the weekly chart. So the mystery charts, I'd say 99%. Maybe they'll come. Maybe a few come from Facebook. Mystery charts are always something that I either recommended directly through trading service or brought up in Facebook. But I'd say probably 95 to 99% come straight from a trading service. Anyway, this was one I recommended a while back. Nice uptrend. And this is a gold stock. And that's a really persistent uptrend for a gold stock. Notice that the bars tend to stack on top of each other, tends to go up day after day, and you could draw a line through quite a few of them. And then also notice that after this correction, the trend really accelerated higher out of the setup. And that's the ultimate goal, is to catch that parabolic move out of some sort of pullback. So I call this a TKO. It's kind of a TKO over 2 days. A TKO, you have a market make a new high and then it gets slammed, ideally the next day, because that means the most amount of people on the wrong side of the market. Also, notice you have a minor double top. That's a pattern I call a double top knockout, or a DTKO. And that's when you have a tiny little double top, a high surrounded by 3 or 4 at least, lower highs, okay, followed by another high, or 2 highs, I should say, surrounded by 3 lower highs in between at least. Anyway, it gives you a little bit of a minor double top. The shorts get excited. They think that that's a little top. Shorts like to get in as soon as possible. They have a bit of an ego. In fact, it's actually a shorting strategy called shorting the parabolics, which I think is a bad strategy, and you can get in a lot of trouble with that. So basically, shorting the parabolics is if a market's going straight up, you short it. Good luck with that. That'll work until it don't. That's one of the few things I can promise. Short it. And some of these guys are putting like leverage in their account and putting their entire account into one position. Just crazy, crazy stuff. And when it works, they print money. But unfortunately, what if that stock gets halted and opens 10, 20, 30 points higher? You're going to be a hurting pup really quick. And that's one of the cool things about the TKO is sometimes the market will go parabolic, and what's happening is those shorts are getting squeezed out on the way up. And as I preach every week, or most every week, I should say, everything I do has a psychological backing. So technical analysis can be seen as like mumbo jumbo if you're doing some arcane thing or whatever. But if you're being conceptually correct, you're just looking at the market and saying, okay, there's obviously demand for this market. I've got my little pattern. I've got my little setup. It's a clean chart. I think it's worth a shot. Anyway, there's all the parameters down below. Fairly volatile stock, so it took 5 points of risk, which was a fairly high percentage-wise risk, but you adjust your share size down accordingly. And this is based on a hypothetical 100K account, although I do take the trades, and I will show you how I played this one in just a second. So the entry was up there, stop was down here, and again, the IPT was up here. So there's the actual trades, and I'll walk you through those in just 1 second. But plus 400 there on the entry, minus 200, a little bit shy of that IPT, and I'll explain to you why I did that in just 1 second. We talked about it in detail last week, so if you want to take a look at last week's webinar, or you can go to my playlist, Dave Landry's Methodology in Action, because I take the subset of like the actual trades and stuff, and I put that into Methodology in Action so you can see how it all works. But anyway, I ended up getting out of the remainder 200 on the spill that we had this morning, the debacle. So anyway, if you take where I exited, which was a little shy of that IPT, I was trying to get out a little bit closer to that 31 and change, and then the market came back in by the time I got around to getting out. And part of the reason it sort of came back in is I'm over on Facebook saying, okay, guys, I'm thinking about getting out. Don't split hairs. We're close enough to the profit target. By the time I got out, I should say, I had the market to come back in a little bit, but still not a bad trade. Almost 4 points in the first loaf, 200 shares on that profit-taking loaf, so to speak. That's $784. $1.81 loss on the remainder, and that sucks, to put it mildly. Especially, and you don't want to do this, and it kind of pains me to talk about it, but you don't want to look at where you were, because all trades eventually end badly, right? You can't look at you're losing 6 points on this trade, because overall you made money, of course, provided you use a little discretion on the thing. Now, I don't want to rub salt in anybody's wounds. If you didn't use discretion, that's fine. Mechanically following something like this is a discretionary method, but you can follow it mechanically based on my recommendations, and that's how I track everything. But if you are following mechanically, if you're newer to trading, or if you lack discipline, then by all means get the reps in, and that's another one of those million little things I really want to harp on in upcoming weeks. By the way, I don't know if I said this earlier, I probably want to do a show next week. Got a lot going on. I do have a webinar for Metastock if you're interested in attending that. And all next week, webinars doing an online conference. So I'll put a link down below. Anyway, so overall, 784 on the first loaf. Remember the first loaf on the 100K, you want to try to at least get 1% overall on the account, because we're risking 2%. And then so that's $1,000. Unfortunately, you didn't quite get that $1,000. As I preach, the real money's in the second loaf, not in this particular case, but longer term. Occasionally, you'll catch that huge run, 300%, 400%, 500%. Doesn't happen that often, but every now and then, and sometimes you'll be in these trades for years. Again, doesn't happen that often, but it can. And that's the ultimate goal. And as I've said before, I was told I make it sound too elusive, and it is a little elusive. It doesn't seem like the trends come along often enough, but they come along just often enough to make it all worthwhile. Anyway, so overall in the trade, $422. Again, nothing to write home about. Better than the poke in the eye, I suppose. Keeps you in the business, and then you could say next and move on, and hopefully find some more winners. 422 on 100K. That's about 0.4%. over a fairly short period of time. So, you know, and you can play the annualized game. It's not bad annualized, but this is not our ultimate goal. This is just kind of a survival type of trade. And maybe the next one, maybe the TPR, or what was that? What was the other stock? There was another stock might take off for us. Anyway, there it is down below. So followed mechanically, $624 loss, 0.6 on your account, depending on how you want to look at that. That sucks. A little discretion helps again. And like I said last week, there's a few things, and I'll show them to you in just one second. But when that market moves really, really fast over a short period of time, you really need to think, okay, I know I'm not getting that full percent out, but I might need to go ahead and take some profits because this is a bit of a gift horse type of trade. Now, here's again, there's the trades up there. So you can see the trade from this morning. You know, you come in, they had earnings last night, and oh shit, well, Dave, why don't you exit before the earnings? Well, what if they had blown out earnings, or what if they might have blown out earnings, but the market didn't like it, right? The market was expecting more, or whatever the case may be. But if you look at some of those really big winners, those aforementioned huge winners that we held for years, you had 10 or 12 or however many earnings periods over that period of time, and the trade just worked out, and you ride out those earnings, good, bad, or indifferent, via a trailing stop. But anyway, so when you have a gap open, a lot of times you have this panic selling on the open. And we actually could use this open gap reversal to our advantage. Like if we're trading, let's say you come in and you see a stock that's set up as a pullback, bigger picture, everything looks fantastic, like this trade looked going into it. And the next day you come in and it gaps down. Well, you might look to play an opening range breakout a la Toby Crable, right? And play that gap higher. That's an ogre, open gap reversal, and that's also a Russian doll because you're trading a pattern within a pattern. That could actually be a really good pattern to trade, especially if you're in a rip-roaring bull market, stock gets whacked, but a lot of people still want to own it, and it turns right back up. In this case, unfortunately, it did not work. You want to let that opening range sort of unfold a little bit, and knowing that if you wait too long and it keeps dropping, you'll lose a lot more than you intended to lose. But you got to give it a little bit of some room, but you have to have an uncle point in mind where you'll get out, no questions asked. And my hope was that it would find its low within the first 30 minutes or so of trading, or ideally first 5 minutes of trading. This is a 5-minute bar. And unfortunately, it did not. So I got out for a bigger loss than if I'd have just gotten out on the open. Well, it happens, and that's the trade-off, and that's probably why they call it trading. There's always a trade-off. Now, just to recap, again, when you're using a little bit of discretion, whether it be like a potential stop situation, okay, or a profit target being neared, you're not throwing caution to the wind. And like I said last week, nobody's perfect in their trading or analysis, unlike the YouTube gurus will lead you to believe, okay? Nobody's perfect. So again, the example that I used last week was we had a stock that went down to $8.99 and our stop was at 9. This was years ago. And it was a little solar stock back when solar was hot, no pun intended. And there was, I try to remember exactly how it was. I think there was no actual trading there. It was just a print right at $8.99, but the market was actually bidding like 9 or higher after that print. So I don't know how that print happened. And it might have been legitimate. It might have been like 100 shares or 200 shares. It was not significant. However, mechanically and technically, it did stop out. And then somebody asked me afterwards, and then of course it took off, went up 300% or whatever the case may be. But somebody asked me after, well, why did you set your stop at $8.99? It's like, well, if I knew that it would only go to 9 and not below 9, then I'd have like some kind of secret or whatever, a holy grail, and I wouldn't share it, right? The bottom line is, as we'll get to in just one second, is that I've tried to multi-process. I'm sorry. But the bottom line is, again, I'll get to in a minute, is that we're on a level playing field, and that's a good thing, okay? And the bottom line is, it's not the smartest who wins, because there's a lot of smart people can't make any money in the markets. And Eckhart talks about that quite a bit, and he's got a really good quote. I wish I could think of it exactly, but paraphrasing, I really haven't seen much correlation between intelligence and trading. I know a lot of people who aren't intelligent that do really well. I know a lot of people that are intelligent that can't trade to save their lives. And basically, he's saying average intelligence is more than adequate, and I agree. And that's why I've taken on the name trend following moron. I didn't like it at first. I was very upset, and I was down in the dumps, because the person who called me that, I had a lot of respect for, and he was looking to do big business with me and all these big projects and stuff. And he got caught up in the markets, and he started fighting the markets, and he didn't like the fact that I was just, and I thought I was just kind of kidding around with him and all by saying, well, it looks like it's going up to me, and I draw my big blue arrows. And anyway, so it ended badly between us. But after getting over my initial, stages of grief, whatever, denial and whatever they are, the stages of depression and everything, I got to thinking about it, and there's a couple times where I was trying to buy the bottom or sell the top or whatever the case may be, and I got burned on it. And then I went back to doing my trend following moron stuff, and all of a sudden I'm like, wait a minute, Dave, maybe you are a trend following moron. Anyway, so we talked about this last week. This was the near miss again on the AGI. And you just need to ask yourself a few questions. How far has it gone? How fast has it gone? And how close is it to that IPT? Now, sometimes you'll watch it intraday and it just kind of gets, let's say we're looking at 31, just make the math easy. So it gets to like 29 and 75, and it comes back in a little bit, then it goes to 29.95 and comes back in, and just all day long it keeps bumping up right below that IPT. Well, then obviously you want to take that additional profit target. On the flip side, if you're blessed with a market that blows through it, then throw in a 1 point trailing stop or whatever the case may be, as long as you're 1 point above the IPT, of course. And then that way, at the least, you'll get the IPT, and then you have the possibility of squeezing out a little more. So the reason I'm talking about discretion is a little discretion goes a long ways, and it can really help you trading out. You have to get your discipline first before you can get your discretion. You might want to write that down. Discipline and then discretion. Anyway, so if it happens really quickly, because those type of moves are very hard to sustain, then by all means, feel free to lock and load, and you should lock and load. All right, here's a mystery chart follow-up. This is CCL. This was a short. And down below is a Landry light. Actually, in this case, it's proper order. Sorry. This is bow tie proper order. Bow tie is 10 simple, 20 exponential, and 30 exponential moving average. And when the moving averages are in proper order, it means the 10 is greater than 20, greater than 30, going up. And that is illustrated down below. Now, when the moving averages begin to cross over, it goes from green, because they were in uptrend proper order, to yellow, because they're no longer in uptrend proper order. And then it goes to red once they're in downtrend proper order. Now, as a general statement, if it's green in uptrend proper order, that's a good thing, okay? But you still need to look at the chart. So an illustrator, and I want to come back to these week after next, and whenever we come back to the million little things after this week's. But these illustrators, as I like to call them, because they're not really indicators. They don't indicate anything. Yeah, I saw yesterday somebody's like, I have an indicator that's going to tell you where the market is. I'm like, no, you don't, Danny. No, you don't, Danny. Anyway, Caddyshack, yeah, that's one of those movies you go back and rewatch, and it's just not that funny. I want to go watch rewatch Naked Gun. I have a feeling it won't be as funny. Airplane's another one of those. But there are a few lines. I speak jive. That was pretty damn good. Anyway, so even though you've got mostly green down here, pay attention to what's happening in the market. Okay, we started making new highs here. That's a good thing, right? And we've got lots of green. All right, so this market's looking pretty good. but then it comes back in. So always pay attention to your net price change. Even though it broke out a little bit here, going back a couple of months, you could see on a net basis, it really hadn't taken off that much. So we know this market's losing steam. Now, we don't do all this analysis until we have the setup, okay? So it's not like I'm going to spend 10 minutes doing this analysis on this chart, although it really only takes a minute. What I'm going to do is I'm going to wait until I have a setup, and then I might do something, okay? And then I'll do all that other analysis. So here we have the bow tie, and that's when the moving averages come together fairly quickly. This is a fairly tight one. Sometimes you get a sloppy one, and it may or may not be worthwhile. There might be another pattern there, but in an ideal world, you want them really, really tight. And also a little tip here, add the 50 simple moving average in. It gives you a good reference point. And when that bow tie intersects at a sharp angle, okay, when the moving average is hit at a sharp angle, those tend to be the best. And keep in mind, the bow tie is designed to catch more of a gradual type of rollover. So notice here, it's like it's going up and up and up and up and up and up and oh, maybe not going up anymore. Oh, it's going up a little more. And then the longer term momentum obviously has slowed, and you're beginning to get that inverted cup look. Classical Schwabach, Edwards and McGee, and more modern classics like Pring type of setup. Anyway, I showed Pring my tattoo, and he's I got a picture of him. It was kind of a pinch me moment. It's kind of exciting. And he said, I'm well armed for trading. Anyway, so there's your bow tie. Kind of gives the appearance of a bow tie, obviously. A little bit of a pullback. All you need is a 1 bar pullback, ideally a higher high and a higher low. And the entry was here, stop was up here. Now, by the way, I want to cover a few things real quick, because these are things I want to get into. It's a little bit more detail, getting back to the million little things. But for instance, one thing is, where would you be wrong in a trade? Where would that trade fail miserably? So in this particular case, if this market starts approaching brand new highs, then maybe it's no longer topping out. Maybe it's just correcting some kind of longer term move and you're done, okay? So at this level here, I realize, okay, this is not too far from all-time highs. If we get short this market and it goes back to here, there's a good chance it might keep on going, and I certainly need to get out the way. But anyway, once you hit that initial profit target, which is this green line here, you bring your stop down to break even, obviously, and then you trail more loosely on the remainder to hopefully capture a longer term trend. Capturing a longer term trend on the short side is way more harder than capturing one on the long side, unless you're blessed with like a big gap down and the stock just dies out over the next 10 years. But anyway, so far we are trailing it lower, see what happens. And on the first loaf, and this was yesterday's mark to market, but on the first loaf, we took partial profits, so it's $1,000 or 1% on a 100K account, 250 shares, and then we let 250 shares ride. And the worst we could do now would be a slight gain on the remainder, because now our stop here, you can see, is well below the entry. So the stop is now at 2150. So worst case scenario, barring overnight gaps, you'll make like 1 3/4 points on the remainder of the trade. Now, we don't want to just make that. We want to make as much as possible, and we want to ride the trend as long as possible. And that's why we position ourselves to stop to break even first at the IPT, and then let that gradually loosen up over time. But anyway, so far so good in the second loaf, and that's the last stock in the portfolio. So if the market makes new highs, goes in, I hope it does. As I tell my people often when we start shorting, I would much rather, I mean, I don't want to get stopped on the shorts. Ideally, I like to get initial profit target, but I'd much rather bigger picture, longer term, to put on some shorts and get stopped out of those shorts and have the market go up for a long, long time, because it's much easier to trade the long side than the short side. But as I preach, and I'm kind of a little wound up, but as I preach, you're not gonna get rich on the short side, but the magical thing that it does, so to speak, is it lets you see, or helps you to see, both sides of the market. So if you're If you trade bow ties to the downside and you're in a stock and it bow ties to the downside, then you need to really reevaluate whether or not you should be long that stock. And as I've said 10,000 times at least, not to pick on them, it is what it is. My friends and colleagues who run a lot of money in long only charters, and I don't blame them because shorting can be a pain in the ass, right? But they tend to be a little bit more glass half full at all times than glass half empty. And we'll come back to that, seeing the market not clearly because you have a position on in just 1 second. But if you play both sides, you tend to see both sides, and that's the biggest help that the short side will give you. Playing the short side is that it really helps you to see both sides of the market. I just want to touch upon the TFM real quick because I've beat the dead horse on this before. Last week we spent a lot of time talking about how market timing is less about beating the market and more about not letting the market beat you. When you have a V-shaped recovery like we're hopefully having now, although it looks like the market's coming off a little bit today, but let's not get too focused on the micro. Market timing really doesn't work that well, okay? Like the pandemic, for instance, market came right back. But what did happen during the pandemic is the market lost 30% of its value, I think, after the trigger. So there's a peace of mind avoiding those diaper change moments. And diaper change moments, just these big spills that the market has. And if you squint your eyes and notice, what's kind of cool is you can see the 10% line in here. That's 90% of the 50-week closing high. That's a very simple formula right here. 90 would be periods, and then 50 would be the moving average. I'm sorry, the 90 would be the percent. So you could 10% below or 90% of the 50-week closing high, and 50 would be the number. But anyway, you could see that the market has made some pretty big spills once it got past that 10%. So that's kind of the designer's intent, is around 10%. You need to think about getting out of the market. And there's no guarantees in trading, but this silly little system would have kept you out of every bear market in history. And I need to figure out I need to find the first video or random thoughts that I published with this system. So the system's been out for a while. But anyway, so we don't know what the diaper change is going to be here just yet. So far, it hasn't been that much. Now, the one thing that did happen, which was a bit of a bummer, is that the sell was way down here, and that was much further than I intended. Like I said a minute ago, I only wanted to lose, I don't want to lose anything, but I wanted to lose a maximum of 10%. And because this system was designed around a calendar chart, it inadvertently, as opposed to a rolling chart, technically, because you only get signals on Friday, the market could lose a lot of money in between. And that's something that I did not adjust for. The problem is, if I adjusted for that, you'd have to go back and look at how many times the market actually touched the 10% level intra-week, but subsequently recovered, because you'd have to go back and make that sell. But anyway, so far it's kind of going straight back up since the sell after a bit of a dip, not much, but we'll see how it shapes out. And again, like I showed last week, the only time market timing works, I should say, provided that you have an occasional bear market, and the market, as it will, loses 50% or more of its money. And back in the 30s, obviously, late 20s, the market lost 83% of its money and value. And then you're thinking, well, that was then, this is now. I know I say this all the time. But then obviously you lost 50% twice in the bear markets in 2000, and I think it was 2007, 2008 bear market. The market had a really big drop. Now, these diaper changes in this spreadsheet are actually after the exit, okay? So that's not the total drop. That's the drop after the exit based on the low of the move, which is LOM here. And again, market timing works as long as the market doesn't come right back and sells off fairly hard. A lot of the guys in the gym, the old guys, they're like, well, I'm just going to hold on, we'll see what happens. And that's fine, but occasionally they might lose half of their money and they might be okay. So far, it looks like we could have a V-shaped recovery in the works. It's like I'm slowly getting, I don't want to use the word bullish, but I'm getting less bearish because not that the sectors look fantastic, but within the sectors, I'm starting to see some issues begin to bottom out. Anyway, so that was a sell signal on the Qs. We did have a little bit of a diaper change there, but not a huge one. 3%, 14 points. And I was long 100 shares in this one, as I've mentioned before, back from this signal way back in 2023. So that got been $1,400. And again, the idea is to be able to sleep at night. And I say this every week. I know I'm just sick of me saying the same thing, but a good friend of mine was staying with me right around the pandemic times. He spent the night here, and he wasn't sleeping well because he was nearing retirement and the market was imploding. And again, there's like a 30% drop after the system exited during the pandemic, and 30% of your retirement is a lot to lose. Okay, so it's kind of it lets you sleep at night. And yeah, getting out and then getting back in, you probably would have lost about 5% or so, or maybe a little bit more of your portfolio, but you would feel like, okay, well, at least I could still retire and I'm not going to have to work another 5 or 10 years or however long it takes the market to recover. So market timing only works when the market don't. Might need to flesh that out a little bit. A couple things I want to show you this week with the Landry 100. Again, like I've been saying, it's a proof of concept thing, although I did take some very small trades. Of course, the bear market started right as I began to experiment with it at real money. And that tends to happen with this momentum type of thing. You got to be careful of that. But anyway, speculation is still alive and well, even in a bearish market. I don't want to say it's a bear market because technically it's not a bear market yet, but it had looked a little iffy here and there. But anyway, this was, as I say each week, these are all bought at new highs. I don't recommend just rushing out and buying stocks at new highs unless you're going to buy at least 100 of them, okay, or some significant number. And we've yet to figure out what that significant number is. I think Jeff, who might be here today, he statistically has some thoughts on that. Something I need to flesh out with him a little bit. But the reason you just don't want to buy a few is because every now and then one will get whacked, which I'll show you in just one second. But as far as a proof of concept, you are much better off buying markets that are going up than markets that are going down. So the buy was on this day here. It didn't do a whole lot initially, but it eventually did take off. And so far, it's up 187%. Now, this was a couple days ago, the day after this one went into the portfolio. And again, this is not real money. I did take some of these trades on a very small basis, like that TOI I just showed you. I am long that one from my experiment. I'm also long that one from, it was an honorable mention in last night's service, and I did take the trade. So I am long that one too. It's college fund worthy. I mean, if you got kids, grandkids, college fund, just put everything into that. I'm joking, obviously. But seriously, put everything into it. No, don't do that. Anyway, so this had this huge move, 126% overnight. Okay, so it can happen, right? And that's the ultimate goal, is just have something take off. Unfortunately, so is the risk. So take a look at this one. And ironically, on the same day, this thing imploded 43%. And those were both trades, so to speak, or whatever, that were only in a day or two. So it happens. And that's why if you were to do something like this, you'd want a big portfolio as far as number of stocks. So you're catching some of those 200 and 300% winners. And if you get stopped out on something at some kind of huge loss, then so be it. So a couple random thoughts. Again, let's just go through these quickly because we talk about them every week. Momentum does end badly or can end badly. All trades eventually end badly, and momentum can end badly. I lost my screen. Okay, here we go. Now, relative strength of the bear market is okay. So we really didn't have enough bear market here, so to speak, to see how that's going to work out. But if you go back and look at some prior presentations when this market was beginning to topple, we had places like drugs, major drugs, which are still kind of hanging in there, and a few other areas, but then they rolled over too. So eventually they find you. So you got to be really careful playing relative strength in the bear market. Now, it's still a great way. I didn't spend too much, or I didn't spend any time on this week, but if you go in and look at the stocks, or maybe even those screenshots, you'll see there's a lot of golds in there. There's some defensive stocks like tobacco. There's some stocks that can be super speculative like biotech and medical. So it's a great way to see where the money is flowing, especially in a bullish type of market. Cash is not trash and treated like an asset class. So this list went down to about 60 something or 70 something not that long ago, but I've actually been able to find stocks to put back into it, even though the market hasn't been fantastic. But I will, if the market were to keep dropping lower and lower and lower, then these stocks would be taken out one by one, and sometimes more than one by one, obviously. And I'd have fewer and fewer stocks if no new stocks are coming in. But it is a really good exercise again. And one thing it's forced me to do is like look at some lower historical volatility stocks, something I'm not crazy about doing, but pay attention to those defensive areas and see what's happening there. And then I don't want to rush out and trade those areas, but that just kind of confirms that, okay, we're in kind of a bearish market where your defensive stocks are doing better than all your go-go stocks, or previously go-go stocks, I should say. Anyway, I started a series a while back called A Million Little Things, and just a brief intro, as I've said 1,000 times, everyone thinks that something great epiphany or something's going to happen, and then bam, I'm a trader. Okay, I'm good to go. It doesn't work that way. It's actually a million little things that are going to make you a trader. And I know I beat the dead horse on a lot of these concepts, and you'll probably see me revisit quite a few. In fact, this superpower series, so to speak, I'm going to go back and talk about a lot of those things. It's like you have to constantly do them. It's not like you got a million little things, number 985,000 or whatever, 65. Okay, do this. It's like you have to always do this. It's not like you do that once. It has to be part of who you are. It has to be somewhat automatic in your execution. But one thing I was thinking about was identify superpowers needed and develop them. Now you're thinking, okay, well, Dave, I can't time travel, okay? And I don't have a crystal ball. So you can't go back in time, and you can't see the future. You can only see the present. So how are you going to develop these superpowers? Well, the good news is it's far from easy, but it can be done. And the bottom line is there's no holy grail, okay? Again, in spite of what the YouTube gurus tell you. This means we're all playing on a level playing field. We have the same information as everybody else, especially if you're a technical trader, okay? If you're a fundamental trader, then there's no way you're going to have a fraction of a percent of what the institutions have, okay? Easy for me to say. They have thousands on staff. They have these computers, supercomputers. They have all kinds of stuff, right? And all types of data and all. And most of them, by the way, with fundamentals, obviously can't beat the S&P 500. They also can call up, if you're a big institution, you probably have some of these CEOs on speed dial. You can call them up. So you've got more inside information than the average Joe. So that's one reason, one argument, I should say, against fundamentals, or certainly as a private trader trying to use fundamentals. But the good news is you're playing on a level playing field. Market goes up, markets go up, markets go down, and markets go sideways. So leading into this series, or sub-series, I should say, I've been writing a lot lately on these superpowers, and I have a little digital notebook, and I've been writing about them for a few weeks now. And I think the biggest superpower that you can develop is to see what is. Now, Linda Raschke once said, if you don't know which way a market is headed, ask a 6-year-old kid. Now, I've quoted Linda on that so many times, people have attributed it to me. And so I don't quote as much as I used to, but it's such a good quote. It's hard not to. And it's funny, the more I listen to Linda, the more I sound like Linda. So I found myself like, okay, stop listening to Linda so much. But you always really get something good out of Linda Raschke. Anyway, a 6-year-old is not worried about his mortgage or his pending divorce or what else, looking smart. A 6-year-old can look at a chart and tell you whether it's going up, down, or sideways. And that's something that you really can't lose sight of. And maybe that could have been a million little things. When you look at a chart, ask yourself, what would a 6-year-old say about the trend? Bernard Baruch says, I am a speculator. The word comes from the Latin speculare, which means to observe. I observe. He was I think around the time of Livermore, one of the most famous investors out there. Very interesting story. From what I understand, he was a big failure and he kept going back to his dad for money. And one time his dad said, you're never going to get another cent from me. I'm going to give you this money this time. You'll never get another cent. And then guess what? He became a world famous trader afterwards because he didn't have a fallback plan anymore and he had to get serious about it. But I digress. Roy Longstreet wrote a good little book. I gave my hard copy away, which is worth a fortune. I didn't realize it was worth a fortune when I did it. Charlie Kirk asked us to bring a book to his retreat that he had a few years back. And this was the one that I brought. I brought the hard copy version and gave it away. It's a good little book. Viewpoints of a Commodity Trader by Roy Longstreet. And if you go to davelandry.com/books-to-read, you could get a link on that. But he said something that made a lot of sense. The deepest secret for the trader is his ability to subordinate his will onto the will of the market. Now, let's say you're long a market, and I've done plenty of presentations on this, but you're no longer seeing the market objective. And it was Mike Tyson, or his trainer, as some say, that said everybody has a plan until they get punched in the face, right? So if you're long a market and wrong, and that market is obviously going down, you're no longer seeing it like a 6-year-old kid, right? Okay. All of a sudden, you find yourself beginning to justify why that market should not be going down. It's oversold due to bounce. The earnings were good. They have these products and their demand is really strong, and nobody else is making these AI chips or whatever the case may be, or biotechnology drug or whatever. And of course, the big one, the situation in Nigeria. All right, any questions on all that? All right, let's shift gears and hop into crypto. If you have any questions or anything, feel free to type them in while I get the crypto set up. We'll take a look at Bitcoin, and then we'll work our way into some other ones. Now, my hope with Bitcoin has always been that it would trade independently of the S&P 500. And if you were to go in and do like a Bitcoin versus the S&P 500, you would probably see that there's a high correlation, or at least they used to be. So let's take a look at that. Bitcoin, USD, and then let's put in the S&P 500. Okay. So it'd be great to have an underlining one, but you can see This is the Bitcoin performance versus the S&P 500. And there's a lot of flat times in here, and it does outperform it here and there. But for the most part, if you look at a chart with, I don't know how to do it on the fly on this particular thing, but if you put the P's underneath Bitcoin, that's what I probably should have done instead, you would see that there's a very high correlation to the two. The two markets tend to move in tandem. Now, in more recent times, you can see nice little Landry light here. Bitcoin is beginning to pull away from the S&P 500, and we're having a pretty good day here. It still has its work cut out for it. We have lots and lots of Landry light, okay, above the 30 EMA. That's a good thing. I was a little concerned about this drifting action recently. Today's action negates that, and it looks a lot better than it did. Richie pointed out that said hope earlier. Yeah. We still have a lot of overhead supply to deal with, but you know, routine, take things one day at a time. I wouldn't rush out and buy Bitcoin. I want to see all-time highs. I want to see it stay there for a while, and then I'll look to maybe play some pullbacks along the way. Ethereum has not been so hot, although it is beginning to wake up. Oh, by the way, earlier I said that there are some speculative issues beginning to look a little better, beginning to bottom out. Biotech, Bitcoin miners, like I can't think of the company's name. It's a cheapie, Graphon or something, GRYP or something. I have it in my watch list. Some of these are beginning to wake up a little bit, so that could be an opportunity there, especially now that Bitcoin itself is beginning to wake up. But anyway, Ethereum has been underperforming Bitcoin. If you look at Ethereum to Bitcoin, the performance has been abysmal. And by the way, never buy a market that's below the 30 EMA, okay? So this entire run has been contained, and it's like a 50% drop. It has been contained by the 30 EMA, just an FYI. Anyway, now that Bitcoin's waking up a little bit, it can really help you to be the bellwether. And you can start looking at these shit coins, SHYT, and sometimes you can just buy the ones that are going straight up. Like that one looks kind of interesting. I'd have to do a little more analysis on it. It might be kind of thin, but it looks like it's trying to break out and go higher. Now, I'm not a breakout or Weller strength trader as a general statement, with the exceptions of possibly IPOs on occasion, very specific patterns there. However, with these shitcoins, sometimes you can just buy the ones, again, that are going up, especially if they're hitting new highs or maybe like bow ties and things like that coming off of big picture basis. Like this is another one I might take a deeper look at, see if it's thick enough to trade. The great thing about the crypto is the bull bear cycles. My coon ass just slipped out. People are like, you don't sound like a coon ass. It's like, well, come to a webinar. The bull bear cycle. The bull bear cycle could be pretty quick, which makes it a lot of fun, and you don't have to wait around long, okay? Now, one of the superpowers I'm gonna get into in upcoming weeks, and I've written a lot about it, is you gotta get the reps in. Now, getting the reps in stocks can take some time because like right now we've been in this, let's just call it this bearish period for, there, I said it again, bearish period for a few months or so, whatever the case may be. And that might take time to resolve. Sometimes that might take years to resolve, okay? And if you're trying to buy stocks in a bear market, you're sailing against the wind, and it could be an exercise in futility. But in crypto, if you wait a week or two, sometimes another bull market comes around, and then the market, these shitcoins at least, not Bitcoin. Bitcoin's becoming very mature. Once you start seeing derivatives and institutions adopting it, and everybody and brother talking about it, then the market becomes more and more efficient, and the traders or investors tend to kind of cancel each other out. But these shit coins are wonderfully inefficient, and they can move. I have very small accounts here, very, very small. I mean, I keep thinking I'm going to probably ramp it up at some point, but I'm just thinking, let me just see if I could parlay these accounts and see what happens. But again, you could just play the relative strength game when they're doing great, and then when they back off a little bit, just go back to more of the core methodology, like the Landry light pullbacks. I mean, this is not a great example, but you can see you've got the Landry light and the pullback to the EMA. So maybe that's what you end up playing. And then when the market begins to take off, and again, Bitcoin being your bellwether begins to take off, then you could start playing this relative strength game. But anyway, crypto's waking up again, so do your homework there. There could be some of these little shitcoins could be worth trading. As I've said before, I'm just getting in. I'm looking for a 20% initial profit target. Ideally, I probably should adjust it to whatever it requires, just like I do with stocks. But for now, it seems like 20% is a good round number. And then I trail the stop on the remainder. All right, any pairs you guys want to look at? Going once, going twice. All right, let's get into stocks. And then looks like now that crypto is waking up in upcoming weeks, looks like I'll have more of a crypto report to show you. I am long JASMY, just full disclosure here, this one right here. And it really hasn't done a whole lot, but you can see it kind of began to break out. It's not fantastic looking, but it is improving. And at the time, it was one of the stronger pairs when I got into it. So I'm right around break even on that. Nothing to really report, but that's the only one I'm long just for what it's worth. All right, let's shift gears again into stocks. If there's any individual stocks you guys want to look at, and girls, let me know. I'll be happy to do that. So let me get that up and running. All right, let's go to the S&Ps, or the Ps, as I usually call them. Fella from a broker I had 20-something years ago. Hey, Dave, I see you still rip me off on the Ps. Well, just stuck in my head. All right, S&P 500. We are above the 50 simple moving average. Nothing magical about that, but it can help to keep you on the right side of the market. However, I wouldn't get too excited just yet. We're already kind of stalling out in today's rally, and we've come back in a little bit. So let's not start kissing each other just yet. Ideally, you want to see us get above the 50 and stay there. And while we're wishing for things, get above the 200 and stay there. And then, of course, have the bow ties flip back up to uptrend proper order. The highest and best use of something like a bow tie is coming off of all-time highs like this, or possibly all-time lows in individual stocks like commodity-related stocks often go down and bottom out forever, gold, oil, etc., and then take off. So it works better, these transitional type of patterns, it works better off the fringe, the major highs and major lows. But they can be useful at higher levels to help keep it on the right side of the market. So this is why I hadn't been extremely excited just yet, because this just looks like a big fat retracement. I'm not going to actually measure it, but just kind of eyeballing it, looks like a pretty serious retracement. How's that for a technical term? And again, on a micro level, we're stalling out a little bit. So I wouldn't get too excited just yet, but I am beginning to see some improvement here and there. NASDAQ composite, nice little opening gap there. Let's see if it holds, okay? So when a market starts going up like this, the FOMO begins to kick in, and sometimes it could be a self-fulfilling prophecy. However, those type of people who feel like they were trying to catch low and didn't get it are your absolute worst traders, and they're going to be quick to dump. So like on this morning's opening gap, if this market begins to come in hard, you can see a lot of players all run for the door at the same time. But yeah, NASDAQ's improving, okay? I want to make sure that I'm seeing what is, okay? Rusty 2000 doesn't look as good as the remainder of the bunch, still the laggard. Pull back a little bit, but remaining in a longer-term downtrend. Yeah, if you have any stocks, type them in now. I'll be happy to take a look at them. Now, EFA shares have been pretty damn impressive. Look at this V-shaped recovery. This is the recovery. This is the mother of all V-shaped recoveries. So EFA shares, these are foreign stocks. came back sharply. The only problem is these V-shaped recoveries at high levels are very hard to sustain. By the time the market gets all the way back to the old highs, it's already overbought. So for me to get excited, I'd like to see it break out and keep on breaking out. The good news is usually, we sneeze, the world gets a cold, but this time it's a little bit different because the way things kind of shook out, where the world outperformed us after the initial spill, right? They went down with us, but then they've since recovered. So that's kind of an interesting phenomenon that's happening. Just FYI, real quick, there's a pound. It's pulled back a little bit. Uptrend remains intact, obviously. Ditto for the euro, pulling back a little, but uptrend remains intact. So those would indicate, obviously, it's pound versus dollar, euro versus dollar. So the dollar is weaker at this particular time. And that's helping gold along a little today, notwithstanding. So gold, the commodity, got whacked today. That makes me feel a little bit better about getting whacked in a gold stock. My daughter called me a couple of days ago. Did you buy gold when I told you to buy it? I'm like, I don't remember you. I remember you telling mom to sell gold because it was high. But I'm like, yeah, I look at this every day, babe. That's what I do for a living, But anyway, you can see gold got whacked pretty hard today. Longer term, still in an uptrend. Longer term still looks okay. Gold stocks getting whacked too, selling off fairly hard, but they're only down to 30 EMA. And the 30 EMA, as I preach, can really be your best friend. Let's take a look at a few other areas. Defense, another one of those V-shaped recoveries, but it would be really hard. This is kind of wide and loose and all over the place. It'd be really hard for me to get excited about defense unless it breaks out and keeps on keeping on. Most areas, again, there's retail. Take a look at software. In fact, software is getting whacked. I'm sorry, healthcare. Healthcare is getting whacked today. So far, just pulled back a little bit, selling off fairly hard. The financials have come back quite a bit, but so far they still look like a big picture retrace. And at these high levels, with all this overhead supply, this is another market that would have to make new highs, all-time highs, for me to get excited. Energies have been looking abysmal. So far, just pulling back from their slide. So a lot of areas looking pretty ugly still. Semiconductors have only made it back to their 50. Unfortunately, if we get past that 50, we've had tons and tons of overhead supply. So the market, yeah, it's improving shorter term, and there are some individual stocks, some of these digital miners, for instance, you can see like this GRYP. It's a penny stock, but that's starting to look kind of interesting. You've got a bit of a bow tie in the works here. Not quite proper order, but close enough. So that's kind of interesting. And there's a few more like that have kind of been left for dead that are now rising from the ashes. Like the Phoenix strategy. The Phoenix strategy, by the way, I like to see the market come down and bottom out for years, okay? It did come flying off the lows. This is kind of a micro version of it, a bit of a cup and handle, but there are some areas out there like these miners that are beginning to bottom out. And we're paying attention to that just to see if anything comes from it. Like pot stocks are trying to bottom out a little bit. I wouldn't rush out and buy them just yet, but they're improving a bit. You have to be, and the reason I use the word like bearish type of market as opposed to a bear market or a bull market or whatever earlier is because once you label yourself, you're kind of stuck in that box. Whereas if you're a little bit more flexible, you can say, okay, it still looks kind of bearish out there, but there are, let me play devil's advocate. What's actually working? Well, marijuana stocks are trying to bottom out. Selected biotechs trying to bottom out. There's a few like TOI that's making a decent run. We talked about that a minute ago. So there are some areas of improvement, and you want to just keep looking for that. And your job is to observe, okay? And you want to observe what's strengthening, observe what's still weak, and then kind of put your general plan together. Right now, you don't have the wind at your back, so to speak, because most sectors remain in downtrends. The overall market remains in a downtrend for now, so far just retracing. So you don't have that behind you. So ideally, you want all those things working unless you're buying something like a gold stock. Anyway, pay attention to what's happening. Is it going up? Is it going down? And of course, is it going sideways? Okay, I think that's pretty much it. Any questions? No stocks today. We had a quiet bunch. I think most everybody brings up the stocks at Facebook, so we kind of kind of eliminated that from this presentation. But to those who aren't there or weren't members, anything you want to talk about? Okay, I'll give a second for my YouTube people to catch up. All right, while we're in impasse, obviously, I want to thank all you guys and girls for attending. Likely there won't be a show next week. I'm very poor at announcing these things, but if you don't see a show next week, it's because there is no show, just because there's a lot going on. I do have the webinar for Metastock, so check the link below if you watch a recording of this. Everybody have a great weekend. Everybody in Facebook, I'll see you in a little while, and may the trend be with you, and hope to see you again in a couple of weeks. Thank you so much. You're welcome.